Today, I want to share with you how you can retire in the next 12 years. In this video, I'm a bit crazy, but I want to share you some realistic views that I have learned from past early retirement folks, investors, and what their success are. So I'm going to show you the 7 key steps of how you can retire in the next 12 years. So see you soon. Hello, welcome. My name is Alex Ko, and today I want to share with you why this is a great time to invest for you to focus on how you potentially could retire in the next 12 years. This video is not just for 18-year-olds or 15-year-olds or 21, 50 or 65-year-olds. It's for everybody because I see a trend, I see a cycle. I know a lot of people who retired early because they started their investing between 2009 and 2012. And yes, those were the period where we had a great financial crash. And that's the best time to invest because after that, there was a 10-year bull run. And guess what? We are in 2021. We had just experienced one of the worst crash that we had globally due to the pandemic COVID-19. And now with the huge recovery, it's only the beginning because now we've accepted new technological revolution change that's going to change the way we shop, we sleep, the way we drive, and the way we travel. So this is a great opportunity for people to invest now. By the time in 2032, 33, 34, most of these stocks will mature and most of these stocks will be high growth and going into multiple billions and trillions of dollars. And that's when, if you're an early investor starting in 2021 or even before, you will benefit from this great bull run for the next decade. Before I start with the 7 steps on how you can achieve early retirement in the next 12 years, I've got a couple of ground rules. So first is to focus on your savings and just invest in equity stocks and shares. You need to save before you can invest. If you don't do that, that's never going to happen. Second is to invest in growth companies only. Companies that have got great growth, early growth in the year 2021. If you start investing in companies that have already grown, then you're a bit too late. And the third one is you can go from 0 to 7 figures of $1.5 million in the next 12 years. So it's from 0. It doesn't matter. You have to start with 100 grand or 500 grand. You can actually start from 0, but you have to save aggressively. And with $1.5 million or pounds that you have, potentially by the end, you get $75,000 every year. Because with $1.5 million, you could be investing on a property after that, or you can be investing in stocks and shares or dividends or a business. As long as you can generate about 45% every year, you're looking about $75,000 a year and the monthly about $6,500 a month. Imagine if somebody from the bank gives you $6,500 every month, will you still go back to work? Less likely. You can pay your mortgage off, you can get your car that you need, you can live on expenses, and with the time you have the 9-to-5 job that you would retire from, you can do something else. You can generate other forms of income with the job that you actually love. So my rule number 1, the first step, the first method is invest in growth stocks. Not those dividend stocks, not those dividend yield that people you see from the internet, all this dividend Warren Buffett method. Those will not help you because dividends, the most you can get is a 12% growth every year. And with a 12% dividend to get to 1.5 million, you need at least 500,000 to be invested now. From 500,000, you will double to 2 million at the end of your 12th year. But where are you going to get 500,000? If you have, great, that's what you do. But if you don't, then you struggle. Even with 250 grand, by the time after 12 years, you get a 12% super great dividend or dividend growth. The most you get is $1 million. But that's with 250 grand, very safe investment. So my first message is no dividend companies, just focus on growth. High concentrated growth stocks portfolio. Second method is to find a growth company that can go 50x. 50 times of where it is today. You must be thinking, Alex, you're crazy. Of course I'm crazy. I'm crazy because I've seen the likes of Netflix gone 50x. I've seen Shopify gone 50x in the last 6 years. I've seen SEA Limited gone 50x. I've seen Tesla gone more than 50x. I've seen Amazon, Google, Apple. The list goes on. There's so many of these stocks, so many of these brands that you have encountered, that you have used their products. And I'm sure standing in 2021 today, you can start to see what will be the next big thing. Ask a young person what will be the next big company. I'm sure they'll come up with names like space travel, they come with genetic editing, they come with electric vehicles. There's still lots of names out there. So 2021 has produced and given us an opportunity to see new companies, given them an opportunity. So number 2, find the next 50x stock. Honestly, if you focus and concentrate, it's not that hard. Step number 3, to find that 50x stock, you have to find a company not in the maturing stage of the business. Look at this chart of my 6-cycle stage of how a business starts from start to finish. You need to find one of those stage 2 and stage 3 where it's the proof of concept and proof of scaling phase. A company who's proven a concept of the design and now they want to start expanding. Okay, it could be a 3D printing company, it could be a genetic editing, but you need to find a company that's still early stage, that's doing really well, with great CEO, with great cash flow, great expenditure, great patent, great team, great marketing. It needs to be the whole holistic view. Once you find that company that's still a good value, then you should go all in and focus on them and study about them, because it's better and easier for you to try to focus on 50 different stocks. Focus on their good quality 2, 5, 6 different stocks on great quality growth. And remember, it needs to be proof of concept and pre-scaling phase. Number 4, I said this, I'm going to say this on number 4, a concentrated portfolio, okay? This Warren Buffett type diversified portfolioification, your financial advisor might be telling you that you need to have 30 different stocks, you need to own some index. That's not going to help if you want to retire early. If you want your stocks to grow over the next 30, 40 years, fine. But if you want a short-term burst, concentrated portfolio is the way to go. This has been proven by the Netflix investor who went all in 2007 and my mate who retired in 2016. This happened to all the Tesla investors in 2012, went all in, and then it came out 2020, early retirement. So you need to find this pocket, concentrated portfolio, because it's all about the breakout. When I say breakout meaning when the different phase of the company, different cycle stage, they start jumping on breaking out opportunity. That's when the stocks start going stock split, when the stocks breaking out 50%, when stocks get more contracts and expansion globally. That's where you want to be, in the middle of the epic center of this breakout. When you start investing post-breakout, it's a bit too late. So you have to be in it before the breakout. So when I say concentrated portfolio, you have to focus on owning the stock in high volume. I've seen loads of young investors coming in, trying to buy couple of $100s of the stocks and then another couple of hundred in that stock. No, you need a concentrated portfolio with a concentrated volume. Okay, what I'm talking about is you need to start going from 0 to 25 grand at least on a single stock. It could be lemonade, it could be space travel stock, genetic editing, like Crispier. So you need to go in at owning at least $25,000, or if you find a cheaper stock that's still under $1 billion valuation, own 1,000 to 5,000 numbers of shares of these stocks. There's no point owning just 10 shares or 20 shares. You need to own a lot. That's how this Netflix investor, that's how this Apple investor, that's how this Tesla investor started buying 1,000 shares or spending $25,000 on these share companies when they were relatively young. Point number 6 that I want to share with you as well is when you start buying these stocks, you could be owning 3 or 4 stocks in high concentrated amount, but just small portfolio concentrated. You need also an exit strategy. It's no point buying these stocks and you notice that day one when you bought, you expect the roadmap of this company to go from A to D. But then somehow they divert and change the business and it's hampering the business. So you need an exit strategy saying if that company changes a diversification or it goes elsewhere, then you have to exit and move and find something else. Don't just stay in that stock. Exit strategy is important as an investor for your risk management. Finally, step number 7 is so easy. It's just buy and hold and convict to that stock. To convict, you have to do your research. To convict, you have to buy high volume. To convict, you have to believe and also focus on the business and the roadmap. It's not about the price action where you try to buy and sell and all that nonsense. It's virtually buy, hold, and stomach the volatility. If a stock goes in a straight line, everybody will be rich. Not all of us will succeed, but you need to buy and hold and go through all difficult challenges with the company. And that's when, if they do come out at the end, becoming the next $100 billion or $1 trillion or $2 trillion company, then you've done it. But you have to do it when they own this company, when they were 1 billion, 10 billion, or under 50 billion. That's where you can own and buy the volume. So hold and stomach the volatility is what you need to know and be on the right with the business. Simple as that. So it's all up to you. 12 years is possible. I've seen a lot of people investing in 2007, 8, 9, up to 12 and retiring this year and a few years before. It's possible all these young people going to early retirement before the age of 45. And me, I'm halfway through my journey and hopefully my focus is 2025. That's when my dozen year is up. Hopefully I can retire and be a person who spends more time on 95 on quality job that I like rather than my 9-to-5 desk job. So this is me. I hope you like this video. So thank you very much. This is me on my video on how you can use the 7 key steps to retire in the next 12 years. So please do like and subscribe or share my video with somebody else which you find useful. Join my free Discord channel where everybody comes together and chat. And there also to chat to my Patreon members. Yes, I have a Patreon group that goes Discord, private membership, and also Telegram, which I share things on a daily basis, weekly basis, all my findings exclusively for my Patreon members. And also you to support me to get me going more quality contents for you guys. So hope to see you in future. Hope to see you soon. And have a good day.
I hope you enjoyed that video. Please like this video. And subscribe to the channel. Please press the bell button. Ding dong. Finally, watch the recent video up here. Bye bye. Bye bye.